Friday, June 8th, 2018, Monaco 64, home of alternative economics and contrarian views. I'm going to talk about derivatives this morning. Before that, of course, I have a quick look at the markets. I used to work as a futures and options broker, which is a derivatives, and I used to work in the exchange traded derivatives market. But there's a huge other derivatives market called the OTC, or over-the-counter market. And I'm going to talk about why Deutsche Bank is only the tip of the iceberg in terms of derivatives. Deutsche Bank is much bigger than just Deutsche Bank failing. Deutsche Bank failure would be a complete annihilation of the whole fiat money system. And I'll explain why. Before that, though, I'll go through the prices. It's 9:20 a.m. London, so a little later than usual. Spot gold is $12.9840, up $1.50. Silver 16.67, down 2 cents. Looks like the bullion banks are still manipulating the precious metals. Silver broke out yesterday from a really important trend line on a long-term triangle. It broke through that, which was around 680, got even up to 691. But we saw towards the end of the day, they came in and sold naked short futures in silver. And that's how they manipulate the price. And I'll talk a little bit about that later, how they do it through the derivatives. So the Dow this morning, down 140. So down 0.5%, 25,094. Yesterday, the Dow did quite well, was up again, while the other indices like the S&P and NASDAQ were actually down. S&P this morning is down 15, or 0.5% at 2754. The NASDAQ 100 futures is down 70, or 1%. Currency-wise, we're seeing actually the dollar rally against the European currencies. The pound is down a little bit, 0.1% at 134.05. The euro is down 0.33% at 117.60. The dollar is down against the yen, 109.35, 0.33%. So that's what's happening with the markets. Let's just have a quick look at the Italian yield. If things have, things have picked up there again. The Italian 10-year yield is now back up above 3%, up 4 basis points at 310. But so that's out there still. But I want to focus on derivatives. And what are derivatives? Well, derivatives are just side bets. They're just bets on underlying assets. The thing about derivatives, they started out on agricultural commodities, where people, buyers and producers, the farmers or the buyers of the crops, they used to hedge in order to lock in prices. All because of weather changes, how well the crop went. Farmers, they needed to pay their creditor, for example. So if they saw that the price of wheat was at a good price, and they were concerned that by the harvest that price would drop, they would sell that future. And it wasn't naked, because they did have the crop to deliver. So they lock in that price to make sure that if the price went down, they'd be protected. And the same thing for people who, a big bakery, they wanted to fix the price so that if the price went up, they didn't have to worry about raising their prices of bread. They would buy the future. So that's how it worked. You also had speculators. But speculators, they couldn't willy-nilly sell as much futures as they wanted to. They had to be careful, because it's a limited, it's limited by nature, of course, how much crop there is. But then you get the financial derivatives, which is something that's quite, how can I say, new, because before we had a gold standard, interest rates, the price of gold, bond prices were very stable because the credit market couldn't grow as much as it does now. And I recommend people read a paper by Antal Fiketty of Gold Standard University. And I'll put the link below in the description. It's called The Shadow Pyramid. And in it, he talks about how in this regime of irredeemable debt, and what's irredeemable debt? Well, it's debt that can't be paid off because it's the fiat money system since 1971 where you can't pay off a debt. You can't extinguish a debt with gold and silver. The only way to extinguish a debt is through more debt, through more like the U.S. Treasury. They can't pay off their debts. They need to keep, in order to pay off old bonds, they need to issue new bonds. So it's a scam, and it gets bigger and bigger. And what the derivatives and financials do is that they create artificial demand for this irredeemable fiat money system. And how does it do that? Well, buyers of treasuries or BTPs in Italy or bunds in Germany, they're able to hedge by selling the futures. And there's no limit. And he also explains, Antal Fiketty, Professor Fiketty, that in normal commodity futures or derivatives, it's all based on nature, speculation. It's based on the weather, the crops. But in the financial sphere, it's based on gambling or casino. So that's what the investment banks, the big banks, have become, and that's why we had the crisis of '08. That's why they had to be bailed out. Well, they didn't have to be bailed out, but they were bailed out. Because the banks have become so powerful that they got bailed out. And the derivatives mountain, even though it looks like it's shrunk, but like the BIS right now reports that there's 542 trillion in derivatives, notional dollar, at the end of June 2017. But some people speculate that it's even more than a quadrillion, which is 1,000 trillion. So can we trust the BIS with their numbers? I don't think so. And this is just over-the-counter derivatives. It doesn't count the exchange-traded derivatives, albeit they're a lot smaller. And exchange-traded is much more transparent because you know who's taking the positions because it's all published by the exchanges. OTC, it's all the derivatives dealt interbank. And the other thing about derivatives people need to understand, and I know this because I worked in these markets for over 20 years. These OTC derivatives are what people call off-balance sheet. So they're not in the balance sheets of the banks. They're just side bets, even though they control such a huge notional amount. And a lot of times the bankers go on and say, oh, it's only a notional amount. It doesn't matter, our long and shorts, they cancel each other out. But we saw what happened when Lehman Brothers and all the other banks were almost going to fail in the wake of Lehman Brothers. These notional amounts become a liability. So with world GDP where it is, I don't know, it's around 65 or 70 trillion. We've got notional amounts of like a quadrillion, I would say, of derivatives, and that's crazy. So that's how they've been able to keep asset. That's how the central banks and the banks have been able to, how can I say, manipulate prices of financial assets through the derivatives. And the big banks, the too big to fail banks, or SIFI as they call them, they know what would happen if Deutsche Bank would collapse. They would collapse very quickly after that, and the whole system would implode. Another thing I wanted to talk about is like gold and silver. How do they manipulate it? People ask. Well, I've got an article here from 2013 which actually is from RT, and Max Kaiser talks to Antal Fekete, and this is what Max Kaiser says, and I quote, "When I asked Professor Antal Fekete on the Kaiser report recently, and I quote here now, what is the current cash price of gold? He looked at me quizzically because technically speaking, there is no real current market price for gold." That's what he said. And he goes on to say the price quoted for gold and silver comes from the COMEX futures market and is more implied than actual. This is why it's so easy to manipulate the price of gold and silver on COMEX. You can borrow virtually any amount of money you want at virtually no cost and sell futures contracts all day until the price drops to the price you want. Naked short selling. So that's what happened yesterday when silver price started going up during the day. What happened at the end of the day? Well, they just started naked short selling the silver, and the price came off and it didn't break out. And he goes on to say it takes approximately 50 times more buy orders to move the price of silver up $1 than down. These are all the Wall Street banks and City of London banks, I would add, dumping naked shorts all day to keep the price low as a favor to the Fed and other central banks, I would add, who in turn keeps rates near zero, citing the deflation apparent by the low cost of things like silver. So there you go. That's how they've been able to manipulate things. That's how they've been able to print trillions and trillions and upon trillions of dollars of new debt. Not to talk about the derivatives. Professor Fekete thinks the derivatives are like a shadow extra pyramid, inverted pyramid. And if some of you don't know, the extra pyramid, the inverted pyramid, is a pyramid of liquidity. And John Exter was he was the founder of the Sri Lanka Central Bank after World War II. He worked for the New York Fed. He was a very high up guy. He was a gold bug though, and he thought that this irredeemable system dollar, not based on gold, would eventually implode on itself, and all the money would flow down the pyramid. And the tip of the pyramid, of course, is gold. And the higher up the pyramid, the riskier the assets. And he thought that in a crisis, everything would implode, and all the money, and the only thing surviving would be gold. He saw it as a deflationary collapse. Hyperinflationary collapse would probably be the same thing, but instead of imploding, I guess the pyramid would only just explode up, but the gold would stay there. So Professor Fekete thinks the derivatives are like a shadow of that pyramid, and that's what's keeping the pyramid from toppling. So yeah, if Deutsche Bank were to collapse, I think all the other banks would collapse because they're in the same game. Who do you think the counterparties to Deutsche Bank are? All the other big banks. So, and I'll just show you here. This is from the Office of Controller of the Currency in the US. They published the data. I haven't found the data like for European banks, but as you can see here, JPM, that's JP Morgan, they've got 64.5 trillion in derivatives, OTC and cleared derivatives. The US economy is like 20 trillion. So JP Morgan, one bank, has notional derivative amounts 3 times the US economy. That's Citigroup, 46 trillion. Bank of America, 24 trillion. Goldman Sachs, 34 trillion. So there you go. And Goldman Sachs doesn't have as much equity as those other banks. And they even got HSBC, which is a foreign bank but has a US arm. They've got only 3.8 trillion, but I bet you they have a lot more on their UK arm. So it's very difficult to know exactly with the European banks. I've got something here from Zero Hedge, this article about Deutsche Bank. This is from September 2016. And according to this, Deutsche Bank has had 42 trillion euros in derivatives. So yeah, it's a big exposure, but is it a lot bigger than JP Morgan? If you do the exchange rate, it's actually a little less. JP Morgan's got $65 trillion. They got 42 trillion euros, which is about $50 trillion, and the whole system would implode. And the problem about the derivatives as well that people don't realize, when these banks put these bets on in the derivatives market, they leverage themselves massively. That's the thing about derivatives. You only need to put like a small amount of money to control a huge amount of assets. So that's the other thing. When the market starts getting very volatile, the VIX starts going up, look out. I know the VIX has come off a lot lately. So that's what I wanted to talk about this morning. The derivatives market, and that's the big Achilles heel of the fiat money system, and at the same time it's kept it going. One thing though, the consequence of a derivatives implosion, of course, would be the collapse of the fiat money system. It would mean also things going back to how they used to be, I hope. The City of London is an important center of finance, but it's gotten so big because of these derivatives. They're not really doing business, real business. It's a casino. The City of London's become a casino, and so has Wall Street and Frankfurt and Paris to some extent. So there you go. If you enjoyed this video, please like, share it, subscribe to my channel if you haven't yet. You can follow me on Steemit, DTube, and on Twitter as well. And I'll talk to you later. Take care. Bye.